Hi guys, Michael here. In this video I'm going to show you how gold is the forgotten key to riches. I myself have ignored gold for the past couple years, but now it's come up on my radar and I'm shocked in what I've found. If this video brings you value, please like for the whole of the YouTube algorithm and comment your thoughts below. What do you think about gold? And subscribe for more awesome content on personal finance, savings, investing. Let's get into it. So what is gold? Gold was used as a form of currency as early as 550 BC, when King Croesus minted gold coins for the first time in what is now called Turkey. But the adoption of the gold standard in the 1800s cemented its value in modern day finance. This was when most major nations fixed the value of their currency to the gold price. In 1913, the Federal Reserve was created to help stabilize the price of gold and currency, aka manipulate the price of gold and manipulate the currency. Afterwards, the gold standard was readopted at the famous Bretton Woods Agreement to help with economic stability as the post-war rebuilding process began. So let's get into 3 reasons why gold is a great investment today. Firstly, it is a scarce resource and it is tangible, and it is considered a safe haven asset and investment in uncertain times like today. It protects your purchasing power. Gold is considered a safe haven asset in times of extreme deflation or high inflation. It is also a global currency that has earned itself a good reputation in times like the gold standard period. Gold is considered a good diversification tool. Gold behaves differently to the stock market. Normally in uncertain times, stocks and bond prices fall while gold prices increase. Now, 4 reasons why gold might fall. Firstly, rising interest rates. Central banks rise interest rates to lower inflation. And as we said before, gold tends to rise when there's high inflation. So if central banks start raising interest rates to get inflation under control and there's low inflation, this may soften the price of gold. Secondly, is a strong US dollar. Gold tends to rise when the value of the currency is going down, but when the value of the currency going up, this can hurt the price of gold. Thirdly, the production of gold. If there's lots of people mining gold and finding lots of gold and putting lots of gold on the market, this is a simple supply and demand scenario. Where there's increased supply, there is less demand, and this will lower the price of gold. Fourthly, when there is a growing need of income. Gold doesn't produce any income, so investors are looking for income. They will get into high yielding stocks and they will sell their gold. Now, how do you value gold? There's many ways to value gold, but a simple way is the gold to silver ratio. And in 2001, the gold to silver ratio was 50 to 1. Now I believe it is, about 120 to 1. So it can be perceived that it is pretty expensive compared to silver, or it may just be that silver is severely undervalued at the moment. So now that we understand what gold is, what makes it rise and fall, let's get into how has gold compared to the ASX All Ords or the ASX 200 over the past 10 years. The ASX 200 has increased over the past 10 years by approximately 35%, but gold over the same period has increased by approximately 115%. That is a huge outperformance by approximately 80% and would have gave you some sweet gains. If you had $10,000 invested, you would have earned $8,000 more by investing in gold ETF compared to investing in things like the ASX 200 or the All Ords. That is why I'm making this video, because I feel like there's a bunch of new people getting into investing and in personal finance, and there has been a flood of videos on stocks, which is awesome, but I feel like there hasn't been many videos on gold, and gold plays an important role in your portfolio. So, why has gold risen so much in the past 10 years? And my thoughts are, firstly, that central banks have been printing money at a rate that has never been seen before. And like we talked about before earlier in the video, when there is high money printing and devaluing the currency, this raises the price of gold. Also, we have had a lot of uncertain times lately. We just had the GFC 10 years ago, and now we have this current health crisis going on that is also creating more uncertainty. Gold is also a good diversification tool, like we said before, and most fund managers recommend that you have at least 10% of gold in your portfolio to act as a hedge, because if stock prices fall, like we said, gold will tend to rise. So you should put at least 10% of gold in your portfolio. Now, how do we invest in gold? The first way, and probably the easiest way, is just to buy a gold ETF. And on the ASX, there is a gold ETF that's just simply called Gold, G-O-L-D. And over the past 13 years, this ETF has increased by almost 300%, outbeating the ASX 200 in all odds by a huge margin. Secondly, you can make an account with a bullion dealer and invest in a pool of gold. That's where you don't own a specific gold coin or bar, but investors are just in a pool of a certain amount of gold. And this way there's no storage or insurance fees. And if you invest with a reputable gold bullion dealer, it should be pretty safe. Thirdly, you can get a safety deposit box with a bullion dealer, but this is pretty expensive. I looked at the fees and it was almost around 4% per annum, and they're charged every quarter, and this can greatly hurt your returns over long term. That's just where they take your bars and put them separately so you own those individual bars, and you can even get codes put on your bars. Fourthly, is you can get a safe at your house and put the gold coins and bars at your house yourself. This is if you don't trust the bullion dealers, or if you think that there's going to be a big, huge economic crisis and everyone will rush to get their gold out of the gold bullion dealers and they simply won't have the gold there to give. But, like I said, this is a very risky, because if you get robbed, all your gold's gone, or you need to pay insurance, and again, that's very costly. So what are my thoughts on what will happen to the price of gold over the next 10 years? I expect gold to continue in value over the next 10 years pretty aggressively, and it may even outperform the stock market. And that's because the central banks have been printing money like crazy. And this may not cause inflation now when people are not spending money, but when people start spending money again, it may cause high inflation and will inflate the price of gold. Also, there is huge uncertainty what's going to happen. We don't know if this current health crisis could keep going on indefinitely, or if it's going to become a seasonal thing, if they're going to have to go into a third, fourth lockdown. We just don't know what's going to happen. So gold is a good bet and a good store of value, and I'm thinking of maybe putting up to 20% of my portfolio in gold. And my final thoughts are, you should not overlook gold. Gold has been the best wealth builder throughout human history. Throughout history, if you had lots of gold, kings had gold, you were considered wealthy, and that's still true today. So you should not overlook gold, and I hope this video has educated you on how gold works, how it has a place in your portfolio. Now, I'm still bullish on gold, and I still think that dollar cost averaging into index funds for the long term is great, because you can use leverage. It is cheap, it is easy, but gold still has a place in your portfolio. So guys, if this video brought you value, please like for the holy YouTube algorithm, and comment your thoughts below. Do you think gold will outperform gold will outperform stocks over the next 10 years? And subscribe for more awesome content on personal finance, savings, and investing. See you in the next one.